This earnings call audio is presented to you by Alpha Street. Do visit us at www.alphastreet.com.
Ladies and gentlemen, good day and welcome to FY22 earnings conference call of Ebitda Drugs Limited, hosted by Phillip Capital, PCG Desk. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing *0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Apurva Shah from Phillip Capital India Private Limited. Thank you, and over to you, sir.
Good evening, everyone. On behalf of Phillip Capital, I welcome all of you to Q4 and FY22 earnings conference call of Ebitda Drugs Limited. From management, we have Mr. Rahul Batra, Chairman and Managing Director, Mr. Nipun Arora, Chief Financial Officer, Mr. Ashutosh Shukla, Director Sales and Marketing, and Mr. Gurvinder Bhullar, Strategic Advisor for the company. I now hand over the conference to Mr. Rahul Batra for his opening remarks, and then we will have open the floor for question and answer. Thank you, and over to you, Rahul, sir.
Hi. Thank you, Apurva. Good evening, everyone. I welcome you all for the annual earnings call of Ebitda Drugs Limited. To start with, I would like to thank my father, Mr. Vijay Batra, who laid down the foundation of this company in 1980s. I would also like to thank Varun Batra, my brother, who is working hand in hand and taking this vision to next heights. Also, my heartiest congratulations to all the team and my bigger applause for giving their best and committed performance in the last year. To start with, I will give you a brief on the numbers and analysis. Ebitda consolidated revenues from operations for FY22 has increased by 58% to 183.84 crores from 116 crores compared with the last year. The strong top line has only been because of our own brands, followed by our main CRAMS partner and APIs which we have started selling to the third parties. The consolidated EBITDA grew by 72% to 43.5 crores from 25.24 crores compared with the last year. The Ebitda margin expanded from 23.6% from 21.7%. Overall improvement of Ebitda has been account of higher sales of our own brands, exports, and cost realizations. Net profits too increased by 112% to 24.8 crores from 11.7 crores. The company was able to reduce their debtor days to 90 as compared to 106 days. Ebitda continued to focus on increasing productivity and gaining efficiencies across the value chain. The vision to become the net debt free has been achieved last year. Now, coming on to the Ebitda Drugs, all about the production facilities. As you all are aware, that Ebitda Drugs has 4 different plants at different strategic locations. If we talk about the expansions, so just now we have completed one major expansion in Ebitda Drugs plant. The expansion is for the lyophilized injectable capacity. We have increased the capacity by 3 times by installing one new lyophilizer. If we come on to the API plant, which is located at Punjab, we have already commenced the state-of-the-art micro and QC laboratory. This will help us in filing our EU GMP. Already this lab has given us the benefit and helped us in achieving WHO accreditation last year. In addition, we are also adding up one more line with 3 reactors and 2 glass line assemblies. This line will only be for CEP filing and EU GMP approval. The new line will be commenced and operational by July end. If we talk about Edly Formulations, as discussed in October, since we had the building ready and we have installed one more separate manufacturing unit for general lyophilized injectables. We've installed 2 new lyophilizers, and initially we'll be only focusing on the OEM part and non-regulated markets. This plant is almost complete and planned to commence by June end. All the licenses are obtained pertaining to manufacturing and product licenses. We'll be focusing on antifungals and immunosuppressants to start with. The company's main USP lies towards innovation. I'm proud to say that in last 1 year, Beta has launched 15 new molecules. Beta has now finally stepped towards the DCGI approvals, which was a very, very big hurdle earlier. Yes, this last year we got first DCGI approval of Azacitidine oral tablet. We have just now in April, we have recently got one more approval of Cabozantinib capsules in both API and formulation. Company is also awaiting one more approval by June end. This all has happened because of the support of our API, for which we don't have to bank upon any external requirements. Today, Beta has diversified oncology portfolio and with a very strong future pipeline for next 5 years, for which the work has already started. Now I'll take you to the business progress for all the vertical vials. To start with our own brands. Beta's own brand has grown 67% as compared to last year. This year, as per Ipsos data, which we got in December, 2 brands have occupied #1 position in India. There are 6 brands which have achieved top 5 positions in the respective market. Then, growth has been driven only by the new hospital entries, adding lot of many doctors, launching of new 9 products. Another addition towards the own brand is the launch of Azacitidine oral tablet, which is an NDDS and used to come in the form of injectable earlier. Today, Beta has strong position with 110 different SKUs for all the therapeutics, which include lungs, hematology, liver, breast, etc. We aim to keep the same pace for the coming years ahead. Coming on to the international market, our exports. There's a huge scope in this market. We are trying our level best to gain a certain to respectable amount of position in the international market. I would like to share first that we have cleared the pre-audit for Inzima, that is from Colombia. And now the final audit is in next 15 days, that is on 15th May. We will get our approval by August, and simultaneously we will be putting our doses for Colombia. We have already filed many doses in Latin American countries. We expect the business to start early 2023. We have also paid inspection fees for Brazil, that is for Anvisa. We have still to get the confirmation on the final date for the inspection. We have also submitted our first dossier in Thailand and expected an audit soon, but the dates are yet to be confirmed. So these 3 particular audits will give us Anvisa, Inzima, and PICS. So we will be catering to almost, apart from Europe, US, Canada, will be catering to almost the entire continent, entire world. This will open our Latin, Asian, and CIS markets. By 2023-24, we'll achieve our presence in many of the regulated countries. As on today, we have specialized exposed sales team who are supported by very dedicated regulatory team. Recently, in last 6 months, our regulatory team has worked phenomenally well, and they have given almost 24 doses to be submitted in these markets. Recently, in the last 6 months, we have signed many agreements and proceed for the registrations All this will be seen in revenue from 2023-24. We'll try to catch. We are after this, and we are working very aggressively to get the revenue there. But since it's pharma and the registrations do take time, so the revenues we expect to start from early 2023. So coming on to the API business, this year we have received WHO for the facility. WHO GMP certificate not only gives an encouragement to supply the drugs to the local market, but also it opens the avenues for the international market. In Edly Lab itself, we have launched 13 new APIs last year. Edly Lab is among very few companies who are manufacturing molecules like carfilzomib, cabozantinib, and many more. We have got an excellent team to develop the new APIs on a fast track and pass it to the formulations team. Recently, last year, as discussed, Edly Lab has commenced its state-of-art facility to facilitate our quality procedure. This facility is only the micro and the QC lab. We are also adding up one more line with 3 more reactors and 2 glass assembly lines, only to cater Europe market and regulated markets. The production from this line will start by July end, and we have taken a target to file our first CP for Europe by October end. The products have already been identified. We're going to start filing from October end. We also plan to file many CPs by the year 2024-25. Now coming on to our CRAM business. CRAM is a very essential part of our business. In pharma, CRAM business plays a very important role. We value all our CRAM associates. Today, Beta has partnership with almost 50 plus companies, and we expect to add 5 to 7 more this year. Last year, we added around 7 new players, 7 new companies in our portfolio. There's a lot of leverage in terms of production capacity, so we welcome all the companies on board and committed to give them the best cytotoxic products with the highest quality. I've already given my presentation on all the verticals. To conclude, I would like to discuss about the past performance and the future for all the verticals. We have a clear roadmap to achieve 30% growth annually. The roadmap has also been designed and framed for next 5 years. Domestic will be continuing launching the new products, and this gives us an edge in the market. We'll keep on adding the untapped markets like Tier 2, Tier 3 city. The focus will be to increase the PCPM of each and every individual who's working in the sales part. API, again, we will have 5 new developments and will be filing our first CEP by 2022 this year. International, again, we will complete all the audits and start the registrations as soon as possible. So the overall, if we see the success of the company, it totally depends on the commitment. The team which we have right now is very young and very dynamic, and they are working night and day to just achieve the numbers which we think so. We expect that the company will grow at a pace of 30% for the next 3 to 4 years. Here I complete my introduction. Now we welcome you for the questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunjan Gupta from Client First Wealth Management. Please go ahead.
Yeah. Hi, Rahul. Hi, team. First of all, congratulations for the good set of numbers. So, the company mentioned that the company is the leader in the oncology segment. I just wanted to know what's the size of the market in India of oncology?
Mr. Gupta, we are not able to hear you clearly, sir.
Yeah, can you hear me now?
Sir, can you use the handset mode while speaking and not the speakerphone?
Yeah. Hello. Is my audible now?
Sir, please proceed.
Yeah. My question is, as the company mentioned, Beta Drugs is the leader in oncology segment. So, I just wanted to know what's the market size of oncology segment in India, and what's the share of Beta Drugs in it?
All right. Ashutosh, will you answer? Hello.
Mr. Ashutosh Shukla?
Yeah.
Can you answer this? What is the size of the oncology market and how much share we are holding right now?
Current market size is around 4,750 crores, and our market share is 3.75%.
So, just being a 3.5% market share, we are the leaders, right?
No, we are not the leaders. We are leaders for few of the brands.
Okay, we are leaders for few of the brands, right? Also, my next question and the last one is, so our margins have increased this quarter. So, what would be the condition of margins in the next 3 to 4 years that we see? It will grow or it will just be stable like this?
The margin will certainly increase. Since our presence has increased in the domestic market, the margin will certainly increase. And if you talk about, like you said about that we are the leaders. Actually, we are not the leader. We are leaders in the 6 brands. Plus, why we say that we are one of the top most oncology leading company is, the reason is that we do a lot of CRAM business as well. So we put together, we are manufacturing for 10 Indian MNCs. So all their 70%, 60% of their portfolio is manufactured by us. So this is the reason why we talk about that we are one of the largest cytotoxic manufacturing company in India.
All right. That was helpful, Rahul. Thank you very much. All the best.
Cool.
Thank you.
Sorry.
The next question is from the line of Sanjay Atwatramani from Envision Capital. Please go ahead.
Yeah. Good evening, and thank you for giving me this opportunity. Sir, I would just like to know that you have given this guidance of 30% growth annually for the next 3 to 4 years. So, to confirm this is the revenue growth, right? We are expecting?
Yes, this is the revenue growth.
And what can be the Ebitda margin, if you can just give some guidance on this for the next 3 to 4 years?
See, Ebitda margin will grow at a same pace what we have done in the last year. Next year, we expect the Ebitda margins to grow. This year, 2022-23, we expect it to grow by 100 point basis, like till 24 to 24.5. Then again, we will increase up to same level. So by in 3-4 years, we see the Ebitda margin to be landing somewhere between 26 to 27%. 4 years down the line.
Okay, so 4 years down the line, it will be 26-27%, right?
Yeah, it may be more, or it will be at par with 26. It can be more also, since we'll be penetrating more of the international market. So in international market, you can understand how much revenues and how much the price differences are there as compared to the Indian market. So that market is total vacant for us. So we'll be targeting mainly the export. So in 3-4 years down the line, the Ebitda margins will be 100% will be on a higher side.
Okay. So this is great, sir. And any major challenges or major risk we are facing? I mean, you filed many of these approvals in the multiple countries, right? I mean, so any major risk we are facing on these?
See, we used to face some major challenges in terms of the plant, in terms of documentation. All those challenges have become a part of our everyday work now. So every day there is a new challenge. So now this is a regular improvement which we are doing from last 2 years. And now our team is well placed in terms of whatever approvals we are looking forward. In case of audits, the team is well adversed. In terms of documentation, the next team is well adversed. So everything is in process. And if you see the challenges will come in life, but as per our experience, we'll cater those challenges and will come out our best.
Okay. Thank you so much, sir. That's all from my end. Good luck, sir.
Thank you.
Thank you. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. Sir, as I see that industry is growing at 20%, but we as a beta drug has grown almost at 65% in FY22. So how come you have made this, growth rate possible?
Yeah. So I would like to say that we actually have a very right people on the board. It means that the company is driven by all the young forces. We have launched very new products. Then the product identification is one of our priorities, where our team is working very aggressively, right from stage point and to the development point. So both the teams are working in coordination, where one is identifying the product, one is developing the product. So the timeline we decide in launching a product is not more than 6 to 9 months. So this is one of the reasons we are growing at a higher pace. We believe in innovation. Then a lot of development in terms of oncology products are concerned. So last year like I discussed about Ebitda oral. So Ebitda oral, it is used to come in injectable form. So we converted in the formulation in the tablet form. We launched in the market. So this is one NDDS we have launched. So we are working on many new NDDS in this year as well. Maybe those NDDS will be launched next year. So this is one of the key factors: the innovation, the right people on the board. Then one of our important factors why we have grown with this percentage is backwardly integrated. We are actually one of the very few companies in India who are backwardly integrated. So there are very few companies who are manufacturing API and formulation both. So we are doing both the things simultaneously. Then the main point which we think in terms of our 65% or higher growth rate as compared to the industry is that we are very customer oriented. That is our core of our business. Whether it comes in the terms of the grant partners, whether it comes in doctors, or whether it comes in the international partners. So all these four things, I think, will make us prominent and give us a good growth in the future also.
Okay, so thanks for the elaborative answer, sir. So my second and the final question is, if I see, sir, oncology is the most happening therapy area in the pharma industry, and you said that our market share is almost around 3.5 to 4%. So where do you see this beta drug 5 years down the line in the oncology segment?
All right. So what we see is that we intend to grow at a 30% every year for next 5 years. And we want to gain the leadership position in oncology industry. We have planned and we have marked our presence, and we have just started in all the semi-regulated countries. So our target is to cater all the regulated market after this, that is Europe. Then we will be focusing mainly on the Latin CIS through all these different accreditations. We as a team had already started working on this direction. We plan to launch at least 5 to 6 new innovative FPLs, which can become 10 crore plus brand for us. By actually doing this, we can actually think of achieving a leadership position in oncology industry. So next 5 years down the line, we can only be thinking of gaining a leadership position, and that can only happen with all these things: new innovative molecules, new markets, new strategies, new approvals. Then all these things combined together will help us gaining that position.
So when you say leadership position, so any ballpark figure in terms of market share that you are targeting?
We intend to have 14 to 15% market share.
Okay. That's all from my side, sir. Thank you so much, sir.
Okay.
Thank you. We'll move on to the next question. That is on the line of Yogesh Tiwari from Arihant Capital Markets Limited. Please go ahead.
Good evening, and thank you for taking my question. Basically, I wanted to understand a little bit on the raw material side. So, if you can help me to understand which would be your top 3 raw materials in terms of contribution to cost, the top 3 raw materials, and are you seeing any inflationary pressure on that side?
See, oncology, if we talk about the raw materials, so our basic right now is that 70% of our API sourcing is backwardly integrated. So if we talk about the top 3 raw materials which we are manufacturing at the lab facility and supplying to Beta, our foci effervescent is one, then enzalutamide is one, and third one is methotrexate. So these 3 APIs contribute a lot to the volumes. Then the cost inflation is definitely there, but on the same side, we are getting a smoother run over the increasing the cost for the customer end also. So the only advantage we have right now is that we are since I told you that we are backwardly integrated, so we don't have to be like so much worried about the API cost, because API is one thing which is making it sustainable, making it more profitable. So Beta can sustain very well for next year. The other, not sustain, Beta can add up more margins after developing new and innovative molecules through its API company.
Thanks. And if you can throw some light on the working capital days, what is the current working capital days, and how do you see it going forward?
Dekun, will you answer?
Yeah. The current working capital days, we have improved a lot in working capital days. The working capital days earlier in the last year was 92 days, and now it is 70 days. So it is continuously improving. This is because we are working majorly on debtor realization and reducing our debtor days. Inventory days has also reduced a lot. If you compare it, inventory days we have reduced from 50 to 44 days. So it is continuously going better. If you see the debtors number from the 33 crores debtors in the last year, now it is 45 CR. Obviously, compared to turnover, if you compare it, then the debtor days have reduced a lot by 5-6 days.
And any major driver for the reduction in debtor days?
Better realization systems, continuously follow-ups.
In terms of client mix,
it is the persuasion which we are doing with all the clients, whether it's our own brand, whether it's a CRAM, whether it's exports. So we try to get our payments realized well on time. So this is one step which we have taken last year, that even though the sales might be like 1 or 2 crore less, but the payment realization has to be on time. And it's just a persuasion of the entire team which has got this debtor days, which has brought the debtor days down.
Okay, and this working capital days current is sustainable, right? Going in future also, like in the next 2-3 years, this will be sustainable.
Definitely. Not even sustainable, rather it will reduce.
Any particular reason for reduction, if I can understand that?
Because I'll shift majorly, most of the people should be shifted from say 60 days to say 30 days, or say 90 days to 75 days. These are the systems which we are changing right now.
Okay. And on the inventory fund also, you told that no, it has come down the days. So any particular driver over there on the reduction?
Production people are working in the reduction in process cycle time also. So this has resulted in the reduction in working capital.
Sure. And like going forward, you are targeting the CIS countries as well. So just to understand the process over there, how much time it takes for approval, and it's like will there be any effect of the current geopolitical situation on CIS business in the CIS country?
See, CIS, as per today, there are only 2 regions which are disturbed. That is Russia and Ukraine. Otherwise, other areas. I've just been to Uzbek, like last month only. So there is no problem there in Uzbek. Rather, by sales team has traveled to Kyrgyzstan and to Kazakhstan. So both these areas are also not even disturbed. So a lot of opportunities will come from the Russia way, where like unregistered products will also go to Russia. So we are exploring many opportunities in CIS countries right now. We've just started supplying in Georgia. We registered 2 products in Georgia and just started supplying there also.
Sure. And if just to understand, how is the margin profile in CIS compared to other regions? Is it better than average, or it is like along the average, the gross margin?
It is an average.
Okay. And finally, what would be your dependency on China? Like any raw material dependency, or what would be the percentage dependency on China?
So China, we used to source around 40-50% of our KSMs from China only for our API plant. But now we have reduced that also, and we've got it down to 30-35%. And for this, we have come out with a new land. We have just got an allotment of a new land in Himachal that we have got in a particular area which is only for the API. So we are planning after 2-3 years down the line to manufacture all the intermediates at that facility only. So that is again an expansion plan which we are planning for 2024-25. Like after 3-4 years, we might reduce the total dependency on China. But as you know, that China is the main source for all the KSMs for the entire world. They believe on economies of scale. So we want to replicate that economy of scale in India. And our product line is very, very, very different. So we have to work on the technology to get the ANC and KSMs done in this area only. So overall, the dependency has reduced, but still there will be a huge dependency in China because reason is China, the rate, the prices, and the new development which China does, no other country does that in KSM part, not in the API and not in the formulations.
Sure. And any disruption in supply chain?
Mr. Tiwari, may we request that you return to the question queue? There are participants waiting for their turn.
Sure, madam. Sure.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Raghav from Ace Capital Services. Please go ahead.
Hi sir, can you hear me? Hello, can you hear me?
I will hear you. Please proceed. Please proceed.
Okay. Sir, my question is related with the new product launches we are doing for our domestic market. I can see we have a very healthy pipeline over last 2 years, even this year. But going forward, that product launch is going down. So like we have 4 and then 3 and then 3 till 2025. So I wanted to understand the reason behind it. Is it because there are not enough molecules, patent expiry kind of a thing? Or because we are focusing for our next leg of growth, let's say exports, maybe not so much on domestic market where margins are high. So what is the reason of our new product launches ramping down in the future?
All right. So not in any case, we are just diluting the domestic market. Domestic market is always our prime focus, and we'll be putting our focus in the domestic market mainly, primarily. So if we see the product launches which we have done, that is around 9 products last year, then before that 3 products, and this year also we'll be doing around 8 products. We have list ready for 35 new molecules which are becoming off patent by 2025. Maybe we have not mentioned on the slide that we are planning for those products, but those list is already ready. And we have started working on 8 to 12 molecules which will be launched by 2023-24. So this year again 4-5 molecules, next year again 4-5 molecules, then after that year again 5-7 molecules. Apart from this, not only this, we are also working on one NDDS technologies also. So there is one scope, there is one product which we want to launch, and we are just working on that line. Maybe we have not put in the presentation, but as soon as the products are developed, since these are something unique and very difficult to make, so our team should be very committed, and they should be very confident about launching those products. So once those are launched, or once those are on the final phases of launch, we'll inform you. Definitely the pipeline is very, very huge, and we are working on it very aggressively.
Thank you. I think, the slide was having little lesser number, but I understand. You want to develop and then put it into the slides. Thank you. Exactly. My second question will be related with capacity utilization. So we have done certain capacity expansion for the API site and also for, I think, our beta drug site as well. So what is going to be our peak revenue? Let's say if our 100% capacity is going to be realized. Right now we are at 180 crores.
We are not able to hear you clearly. Can you use the handset mode while speaking?
Okay, I'll try to repeat it. Is it better?
No, sir, it's still the same. Your audio is sounding very muffled.
Okay, how about now? Is it better?
Much better.
All right. So my second question was related to capacity utilization. Since we have increased the capacity, what could be our peak revenue if our 100% capacity is utilized? And when do you expect that to happen, right? And what is our current capacity? So if you can give me just these three pictures related with capacity utilization. Current one, peak revenue if 100% utilized, and by when you expect that 100% utilization will happen?
So the current leverage we have in beta for oral facility, we still have a leverage of 60-70%. And if we talk about the injectable facility, we were like facing shortages in terms of lyophilizers. So there we made a change. We had an addition of one new lyophilizer. So again, the leverage is still there for 40-50% in terms of lyo injections are concerned. In terms of, you can say in terms of API, we are adding one more line there. And last year we added one reactor. So again, we have a leverage for domestic market. We'll be having a leverage of 30-40%. And for international market, that's a totally newly sold line. So all the exports will be happening to the new line. So if we talk about the total revenue we can do from this, what we think and what we have seen from our calculations, that we can do a turnover of 350 crores from this current capacity. And taking it forward, as I told you that we have acquired a land, there we are not only allowed to make, we got approval not only to make intermediate, we can have as many blocks as we want. We can have a new formulation plant there. We can have a new API plant there. We can have 2 separate blocks for intermediates. So expansion plan has also been on roll, and for that the work has already started. The land has already been acquired.
Okay, sir. Thank you. Well noted, and all the best. You are growing at a very fast pace, and it's like under promising and over delivering. You say 30%, but you are doing more than that, well more than that. So all the best.
Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir. So I just wanted to understand something on the gross margin side. Now you're doing a lot of work on the regulated market front as well. So how do we see gross margins? Currently it's around 50%. So maybe 3 to 4 years. How do you see gross margin panning out?
Hello.
Hello.
Yeah, sir. Gross margin right now is 39%. If you see from the last year 37.8%, now it is 39%. So it is nearly 110 basis points upward side. This is, as Rahulji has already told you, that this is mainly due to 70% of our captive consumption. We are backwardly integrated, and wherever we are trying day by day, some new molecules could be developed in our API facility, so that our raw material cost could be neutralized. So we see a further reduction of say 100 basis points to 150 basis points every year at least.
So gross margins can basically improve by about 100 to 150 basis points per year, right?
Yeah.
Okay. And 3 to 4 years down the line, how do you see your mix from the domestic market versus regulated market revenue mix?
Rahulji, would you answer that?
Yeah, I'll do. So the mix will be the 40% will be contribution from the domestic market, and 35% will be from the export market. Rest will be from the CRAMS business.
Rest
the
will
CRAMS
from
business will grow.
Contract manufacturing.
Yeah, from the OEMs. The OEMs will grow at the same end, but exports, since we see that exports will rise at a faster pace, in 3 to 4 years down the line. So the contribution from export side will be more.
Okay. So that's the contract manufacturing business, right?
Yes.
Okay. Yeah. Okay. Understood. That's it from me. Thank you.
Thank you. We'll move on to the next question. That is from the line of Ayush Agarwal from SMIFS. Please go ahead.
Sorry, sir, I missed your comments in the last question. What's the contribution from domestic, international, CRAMS business individually?
Yeah, so the domestic will be 30 to 35%, and our export will be again 30-35%, and the CRAMS will come down from 57 to 30-35%. Although the CRAMS will grow at the same pace, since we'll keep on providing all the new products to all our CRAMS partners, but the revenue mix will be as such. As export business, we are doing very less business right now, and we expect a good growth in the coming 3 to 4 years down the line. So the export part will play a major role, and the revenue shift will be towards the export side.
And how much would international business be right now?
We did around 18% growth as compared to last year.
No, in absolute numbers or just contribution wise?
So we did 21 crore this year.
21
crore this year. Yes.
And domestic business, sir?
Domestic, we did 55 crores.
Right. All right. Yeah. This is it. Oh, and sir, just one final question on our existing brands. So we say that we have more than 110 SKUs in the domestic market. So how much, would top 5-10 brands or products would contribute to this 55 crore of domestic business?
Sure. Ashutosh, will you answer this?
Yeah, almost 30%. So
that's a nice distribution.
Number one position, remaining 6 brands are among top 5. So all put together, if you see, it contributes around 30% to overall sales.
That's a nice distribution then. Thank you. That's it from my side, and good luck for the future, sir.
Thank you.
Thank you. The next question is from the line of Santosh from Sky Research. Please go ahead.
Thank you, and congratulations, sir, for the outstanding numbers that you have been delivering year-over-year and every 6 months. I wanted to know, if your company has plans to migrate to the main board of National Stock Exchange. I think last year too, you said it could be migrating soon. So just wanted to hear if you have any plans for this fiscal year.
Yeah. I'll love to answer this. Actually, we have been keeping ourselves so busy with the business performances. We are just focusing on the sales and the production side and on the expansion side. So we thought, let's just focus on the business part first. So moving on to the main board or migration to the main board can be done later also. But obviously, and 100% that is on cards, and soon we'll come back to you on this. But right now, the focus is only and only business right now.
Okay, thank you.
Thank you. The next question is from the line of Pratik Patel from Nifty Millionaire. Please go ahead.
Rahul bhai, how are you?
कैसे Pratik bhai? How are you doing?
तो सबसे पहले आपको बताना है कि you made us horribly wrong. हमको लगता था कि राहुल भाई बोल रहे वैसा नहीं होगा. But you made us all wrong, right? In last 3 years. So I would like to congratulate you, and you will keep making us wrong. Because हमें लगता था कि राहुल भाई बोल रहे करेंगे नहीं करेंगे, but राहुल भाई ने तो बोलने से भी बहुत ज़्यादा कर लिया. मतलब you have done way better than what we have expected, right? So thank you, and you have done a great job, boss.
Thank you.
Yeah, thank you. बस वही बताना था, कोई question नहीं है राहुल भाई. But I have all question has been answered, I think.
Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Aman Vij from Astute Investment. Please go ahead.
Good afternoon, sir.
Sorry to interrupt, Mr. Vij. We are not able to hear you.
Am I audible?
Sir, can you speak a bit louder? You're sounding very soft.
Yeah. Is it better?
Much better. Please proceed.
Yeah. Sure. So my first question is, if you can give a rough margin range of the four segments. What kind of margins do we make in CRAMS versus exports versus domestic versus API?
Hello.
Yes, sir.
Yeah, Mr. Vij, I'll answer you. In CRAMS, we make a margin of somewhere around 18 to 19%. I'm talking about the EBITDA margins.
Okay.
In own brands, we make a margin of somewhere around 31%.
Okay.
In exports, we make a margin of 27 to 30%.
Sure.
In API, we make a margin of 24 to 26%.
Sure, sir. That helps. So, if you can talk about, so who will be our competitors into the same product categories? If you can name some players who are maybe much bigger than us.
I think NATCO is much bigger than us, but I would like Rahul ji or Ashutosh ji to answer this.
Yeah, our major competitors are Zydus Cadila, Intas, Dr. Reddy's, NATCO, and to some extent Cipla.
They are big players in onco, but are they also present in the same products like we are in?
Yes. They are also present with same product line. Apart from that, those companies are having the biologics also.
Yes. So, sir, you have talked about our domestic sales will increase dramatically from here and also exports. So, domestic, what gives us confidence that we will be able to take market share from these big players?
This we have been doing since last 3 years, despite COVID. So when the entire market was closed, the hospitals, the doctor clinics, everything, we worked very hard for new customer conversions to maintain the growth momentum. Now we have very, very healthy customer base. That is one important thing. Secondly, we are available in all major leading hospitals of the country, not only the corporate hospitals, but even the government hospitals we are available. Thirdly, we are working very hard in penetrating Tier 2 and Tier 3 cities, which has given rich dividends to us in the past, and it is going to be the focus. It will remain in the focus for coming years down the line. And lastly, we want to focus in hematology segment and gain good market share there. As of now, the market share in hematology is low, and we are onto it.
Sure, sir. Are we also the lowest cost producer in these products which we cater to, and what will be the price difference between our product and say the biggest player products?
Sorry, I didn't get your question.
Sir, I was asking that are we the lowest cost producer? So if our product is in the market say versus a big player like Zydus or NATCO's product, will our price be lower, much lower than these companies' products? And if it is, what is the range? So it's like 20% lower, or are the pricing same across all the players?
No, more or less the pricing is same for if we compare with the competitors. But we have an edge over others because of the oral business. Oral, definitely our prices are even better than the competitors. Because for oral business, the patients take directly from the distributors. It is not driven by the pharmacy. When it comes to hospital pharmacy, they are definitely asking for margins. Price is always very, very competitive. But when it comes to oral, it is going directly from the distributors, wherein we are selling the product at very good rates.
Sure, sir. And what will be the split of oral versus...
Oh, sorry to interrupt, Mr. Vij. Sir, may we request that you return to the question queue? There are participants waiting for their turn.
Yeah, I'll get back.
Thank you. The next question is from the line of Ashish Rathi from Lucky Investments. Please go ahead.
Thank you for the opportunity. Congrats to Team Beta on the great set of numbers. Rahul ji, Varun ji, Ashutosh ji, also Nipun ji for achieving the improvement in financial parameters. Looking forward to such great numbers again. The question is on capex. What will be the trajectory, and also the tax rate. Nipun ji, if you can help with that for FY23 and 24.
So the capex which we have already incurred, you have seen that it is somewhere around 18 CR. 18-19 CR, 7.5 CR in building and 11.5 CR in machinery. And further, we are not adding any capex other than just adding one line in API for the EU GMP. And for that also, we are, having enough reserves. And if we need some, say, 1 or 2 CR from outside, we'll have it from the bank. But otherwise, we are self-reliant. You've already seen our cash and cash equivalents, and those exceed the outside borrowing by at least 1 CR. So I think this answers your capex part. Should I move to that taxation part?
Yes.
So in taxation, we have already exhausted our MAT credit balance in this year. So now we'll shift the beta from 25% to 22%, and the other ones are already at 22% tax bracket.
Okay. And second question is to Ashutosh ji. Ashutosh ji, what is the status on our hospital tie-ups? How many hospitals or prominent hospitals we've been able to crack in the current year, the year gone by? And anything major that is pending, or largely we are penetrated now into all the major hospital chains in India?
As of now, we are available in all major corporate hospitals of country, barring couple of corporate hospitals. As far as private institutes are concerned in Tier 2 and Tier 3 cities, there is still a lot of scope for product entries, which we are working on currently.
How many we have cracked this year?
This year we expect entry into at least 30 to 35 private hospitals and a couple of more corporate hospitals. Plus,
how many?
We will also be focusing in institutional business like CGHS, Army, and Railways.
Okay. And how many hospitals did we crack, new ones in FY22, the year gone by? Hospital chains?
At least more than 30.
Great. All right. That's all from my side. All the best to all of you. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to one per participant only. We'll move on to the next question that is on the line of Aditya Mutta, an individual investor. Please go ahead.
Yes, sir. Congratulations on a good set of numbers, sir. So I was asking one question. Are you facing any supply side disruption from China, seeing the current COVID disruption over there? And we are sourcing almost 30 to 35% of KSM from there. Hello? Hello?
Yes.
Hello?
Yes.
Yes, sir. Did you hear my question?
Hello?
Hello?
Yeah, can you repeat your question?
Yes, sir. Congratulations on a good set of numbers. I was asking, are you facing any supply side disruption from China? Seeing we are sourcing almost 30 to 35% of our KSM from there.
No, right now we are not facing any challenges in that. And I think in future also, if that is the case, we'll find some alternatives.
Okay. That's it from my side. Thank you, sir.
Thank you.
Hello?
Hello?
Yes, sir. We are not able to hear you. Mr. Rahul?
Yes.
Yes, sir.
Yes.
Please proceed.
I didn't get the question actually. I got disconnected, so you just connected me again.
Yes, sir. Mr. Mutta, may we request you to repeat your question?
I think I have replied to him. The one who was asking that. Yeah.
Yes, sir.
I've replied.
Sorry. I just got disconnected, so I've just been connected again.
So yeah, my question was answered. You are not facing any disruption from China due to current COVID outbreak over there. Thank you.
No. It is taking time, but everything is coming on time. So like maybe the delivery time is taking 30 to 40 days. Earlier it was 25 days, but we are keeping enough inventory for that.
Thank you. The next question is from the line of Subradro Sarkar from Mount Infra Finance. Go ahead.
Hello.
Hello, am I audible? Yeah.
Yes, sir, you're
Yeah.
audible. Please.
Yeah. So my question is, sir, as we told, like we are planning for venturing into like export market and particularly developed market. So in that respect, have we done anything? Have we start like first of all, have we applied for CGMPA license and all those plant related regulation? And then have we like in the molecule level also have we applied for ANDA or DMF? So any update on that side, number one. And number two, sir, if you can help me to understand like our top 5 and 10 brands, how much does they contribute basically? And yeah, so this is initial question.
So I'll start with the export part. So yes, as I told clearly, like on my initial talk, that we have filed all the registrations, and for the plant accreditations we have just started, and we have paid the registration fees for inspection fees for Brazil for Anvisa, which will cover the entire Latin American market. Then we are having a final audit from Colombia for Invima, that is on 15th of May. So that is also concluded. And then we have already filed the dossier for Thailand. So that will cover entire Asia and CIS. So PICS, Invima, Invisa, all are online. For Invisa and PICS, we are just waiting for the date confirmation from their side. When are they coming for the audit? But for Invima, we have already got the clearance, and 15th is our final audit next month. And for the registration part, the dossier part, we have already started filing the dossiers. We've already filed around 62 dossiers in different countries. And regarding the ANDA, we are not targeting US market as on today. So this our major target market is Latin America, CIS, and Southeast Asia.
Okay. So as of now, we are considering the developing market basically. Not to the regulated market.
These are regulated markets also, because Brazil is very, very regulated, and even Thailand and all Southeast Asia is also very regulated. But as on today, we are not targeting US market for next 2 years down the line.
Got it. No, just to understand that, like I know we have not applied for CGMPA from US or MHI, but like current plant which we have, do we think that can qualify for like US or CGMPA regulation? Basically,
If you ask me, our team is self-sufficient to qualify, and plants are very good enough to qualify for these accreditations. But since I told you that we are taking a baby steps, we first have to, whatever things which we have decided on keeping the Latin and CIS market, will first capture these. First Asia market, Latin and CIS market. Then after that we'll be coming to the regulated market, like mainly Europe. Okay. Europe will be targeting only for APIs as of now for 2023-24. For formulations, Europe will be considered in the inspection. We will try to conclude by 2023-24, but the registrations again will start happening in 2024-25. Yes, the plant is capable enough, sufficient enough, and plant can go for any approvals.
Okay. And in terms of
the next question is on the line of Soham Das, an individual investor. Please go ahead.
Hi, thank you. Good evening, and first of all, a very interesting set of numbers and commentary. I'll keep it very short. So looking ahead, how will you, the management team, articulate your strategy? Primarily would like some color in terms of how your incremental sales efforts are directed, where your incremental investment is channeled, and more importantly, where your mental bandwidth is getting allocated. And that's my question. And I'll conclude my question with one last request. If you can be so kind to articulate all the strategy, your ambitions, your right to win, etc. in detail in the upcoming annual report, that'd be great. Not implying any jazzy or fancy looking annual report, but a dense discussion will be very much welcome. Thank you. Over to you, sir. Hello?
Hello. Yes. Actually, I don't know. There's some problem with my phone, sir.
No problem, sir. No problem. Were you able to get my question, or should I repeat it?
Yeah, I could hear your question. Like the first part of the question. The second part of the question I couldn't hear like properly. Like you were talking about the annual report, right?
Yeah. So it's not a question per se. It was just a request that if you can actually make your MD&A a bit more verbose. Yeah.
Detailed information on the annual report, right?
That's right, sir.
All right. So as per as our management bandwidth is concerned, see the bandwidth is divided in different segments. Like if we talk about Mr. Ashutosh, so his bandwidth is totally on the sales side. So how to generate the sales, where to get the sales, and how soon we can achieve this number, and where we can achieve the number one position or in these particular brands. So in terms of his bandwidth is very clear, that is only sales, whether we talk about domestic or whether we talk about international. So if we talk about the bandwidth of Mr. Nipun, our CFO, so his bandwidth is also very clear that he has to get the lowest rate of interest, plus he has to get maximum cash reserve surplus for the company. Our bandwidth, me and along with my brother, we only think about new developments. So what is the product which is coming into the market, which product we have to develop, which line we have to select, then which are the product which can become niche in the coming future. So we have already started working on those lines. So we work on basically the international customers, getting those clients, building their relations with them, making them realize that yes, Beta is the only company of choice for them. Then second is only on the development part. How soon we can get the development, then how we can control this expenditure. We don't have to do much expenditure on the development part. Then these are the bandwidths already decided, and we are working on the same bandwidth altogether.
Thank you. We'll move on to the next question. That is on the line of Rajesh Singla, an individual investor. Please go ahead.
Yeah, hi. Thanks for taking my question. Can you hear me?
Yes, please.
Yeah. So do you have any plans to enter the biosimilar market in the near term, or maybe in, say, next 2-3 years, after 2-3 years?
See, biosimilar market always sounds very interesting, and we have done a preliminary research on that. We are aware of the molecules which are becoming off patent in next 4-5 years down the line. We know manufacturers who are doing that. We have taken the cost of productions from them. We have taken the initial cost on them. Then we have also done a research on which are the companies in which country they are coming up with the new biosimilars. So yes, we certainly, once there is an opportunity and we have enough cash flows to handle that, we'll definitely look out for the biosimilars line.
Okay, thank you. Maybe one more question on M&A. Like, so we are already growing at a very fast pace organically. So do you think that we can look for some more acquisition in the coming years to further accelerate our growth? And also, second question with respect to that would be like, what stops you in guiding in terms of the growth rate above 30%? So why can't we guide for more than like say 35-40 when we are already growing by 35-40% in the past?
All right. So let's talk about the guidance part first. So don't feel excited like the company has committed 30% and they're delivering 40-45%. So it always gives an excitement where that the company is still growing, giving a number of 30%, but still growing at 40-45%. We believe in a strategy of saying 30%, but try to deliver best out of our system. And so this is one thing which we have always focused on. And regarding the mergers, yes, we are open for this strategy. We are in connect with many of M&A people, and we have spoken to them. We have already given our consents also. In case we find any opportunity in oncology line where we find that this product or this acquisition can double our revenues and give us some good inorganic growth in the coming years, we'll explore that opportunity and we'll definitely go for it. So there is no roadblock in terms of any acquisition. The mindset is very, very open, and we will be open for that, for any opportunity of that sort.
Thank you. Ladies and gentlemen, due to time constraint, that was our last question. I now hand the conference over to Mr. Batra for his closing comments.
Thank you so much, everyone, for attending the call. And as last question was there, so we know the situation. We are in COVID times. We don't know when a country comes under lockdown. So the guidance we give 30% is only for the reason that there might be some circumstances where we're not able to produce results. So 30% is our benchmark which we have taken, which we'll try to do. I'm not sure whether 30% is sustainable or not for next 3-4 years. We don't know the scenario right now. But the vision we have right now is that we will be doing 30% next 3 to 4 years down the line, and we'll achieving those sales. Will make our international presence more particular, and will show you the figures like where the contribution from each and every segment has contributed. So this is what all. Thank you all, everyone.
Thank you, everyone.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. We thank you for joining us.
Presented to you by Alpha Street. Now don't forget to subscribe and press the bell icon for notifications. Do also visit us at www.alphastreet.com/India.